Hi everyone, Victoria Sandoval with Select Premier Properties. Today I am with Abel Tejeda. We're going to go over part 3 of our financing series. So we discussed VA. Today we're going to go over FHA and conventional. So just real quick, 101 for anyone who wants to qualify, first-time home buyer, going FHA. What's the requirement credit-wise?
Well, for an FHA, FHA is probably the most lenient loan out there. You can get it going with a 580, preferably right now with a 620, just so that you can get credits towards your closing cost. That is changing, it seems, every day. But that's what most people refer to as the first-time home buyer program. Okay. It's a government loan, basically designed to help people with lower income, and I say lower income because it allows a higher debt-to-income ratio, and people with lower credit score to be able to buy a house. So you basically don't get hit or dinged on your interest rate because it's not really credit driven. So if
down payment, what do you need?
3.5%.
Okay.
Basically that translates to $3,500 per every $100,000 on the price of the property.
Okay, perfect. So what's the minimum income requirement, would you say? So for someone who wants to buy in San Diego, the average home price right now has really gone up, but if they want to get into a condo, I would say medium condo sales price, let's just say $550.
You know what? There's no minimum income at all. It's a combination of the price of the property and how much debt you have. Mm-hmm. That's how we come up with the debt to income ratio.
Assuming zero debt.
Let's say zero debt, and this is just obviously making assumptions.
Yeah.
I would say $6,000, $6,000 a month.
Okay. For the joint. For two people or just for one person?
For one, this is a condo, and the reason being that is that we look at the before taxes income, not after taxes.
Okay, all right, so awesome. So minimum credit, just to recap, minimum credit requirement is, you said 660?
620.
620
for FHA.
For FHA, okay. Mm-hmm. And then income $6,000 a month,
ballpark,
roughly,
yes.
Assuming you have zero debt. Obviously, if you have debt, that's going to deduct from there. So if you have a co-borrower, that's definitely going to help. And then let's talk about...
just really quick, side note, sorry. As far as debt goes, we look at your minimum payment. We don't look at the balance. So if you have a loan that's $10,000 and your minimum payment is only $50, we look at the $50. So don't disqualify yourself just because you have a lot of debt. We look at the minimum payment to be able to qualify.
Okay, so let's talk about the next type of loan, conventional, which is the most lenient from what I've heard, the most lenient type of loan, but it's a little bit more difficult to qualify for that type of loan, right?
Well, it's lenient when it comes to appraisal. Mm-hmm. Other than that, is much more strict.
Okay. Because
it is credit driven. So you get a better rate given your credit score. Mm-hmm. It has a more strict debt to income ratio. With FHA, and I don't want to get too technical here, but just to give you an idea, then FHA you're able to go up to 56%. Mm-hmm. With conventional, you can only
56%
debt to income ratio.
Okay.
And
mm-hmm.
with conventional,
so
you can
no
only
more than 56% of your income can go towards debt, basically, is what you're
saying. Debt including housing debt.
Okay.
But with conventional only 50, so you're limited to 50.
Right.
And as far as down payment goes, you can come in with as low as 3%. That depends on the area, and it's on a per property basis. We have to run a search, but just in general terms, 5%, and you get a killer rate.
Okay, so the leniency is more about the condition of the property as opposed to the qualifications of the borrower.
That is correct.
Okay,
with conventional, you can get away with unpermitted additions and things like that, where FHA will make you tear it down or get permits.
With FHA, it has to be turnkey ready versus with conventional, it might need some work, it might be a fixer-upper, but it could pass. So,
yes, correct.
Anything else you want to add regarding the two types of loans?
Well, you know what? Honestly, people think that FHA is the way to go, but right now, lenders are becoming more lenient and relaxing their guidelines with conventional. Right now, if you have a good credit, let's say 680 and above, go to the conventional route. 5% down, and You can even avoid mortgage insurance. So conventional if you can go.
With so many different mortgage options out there, your best bet is just to call a lender, a qualified lender who has experience. Call Abel or anyone else that's out there that's pretty experienced in the mortgage industry. But if you have any additional questions, feel free to give me a call Abel, or subscribe to my YouTube channel for more buyer seller tips. Bye.